All right, recording is on. We're about to kick this off. So appreciate everyone jumping on Tuesday, for our weekly Cash Flow Empire Tuesday podcast, live podcast. And we have a special guest tonight. Funny enough, we actually had a call with this man last week, got to learn his story, connected very well. And guess what? Just how life works. And we have him back on for this call. Like I mentioned, weekly on Tuesdays. So he started off. I'll do a little intro here. Hand it off to Willie, who's the co-host tonight. So this man, he started in real estate age 17, wanting to kind of dive in. Started off in property management. When we fast forward to where he is now, he's moved up the ladder in property management, but guess what? He's also closed on 195 units recently and working on another deal. I won't spoil it for everyone. He's going to share all his insights. He's going to share all his experience, and we're excited to kick this off. But before we do that and pass it on to this man, I want to introduce Willie, co-host.
Hey, how you guys doing tonight? My name is Willie. I'm based in Connecticut, and today I am the co-host of this Tuesday night call. And like Eddie said, we have a special guest named Kylan. He's very inspirational story. I connected with him on social media, and then we invited him to our live on last Thursday, and he was able to share a lot of gems. So we're definitely very excited to introduce Kylan to you guys. Kylan, you're on mute.
What's going on, brother? How are you feeling?
Okay, perfect. Can everybody hear me now?
Yes,
I
sir.
want to say thank you for allowing me to be on this phone call. I definitely enjoyed our Instagram live, which prepped me for this talk. They did give a great introduction of myself. But like they said, I did start my career when I was 17 years old. That was the beginning of COVID in 21. And I knew that I wanted to always get into real estate, but I just kept using my age as an excuse. And once when we started doing online learning, that's when I was fully committed with real estate. And I started by just driving every single complex in Euless, watching Grant Cardone videos from 12 in the morning to 12 at nighttime. And eventually he said, like, hey, eventually you have to be on site. That's the way how you're going to learn this game. So when I was driving the properties in Euless, I didn't know what I was looking for, but I was committed. And it came to one property where I noticed there was more light fixtures than the previous other properties. And in my head, I'm like, okay, that could actually reduce the crime rate. And then being a property management, I also learned that it's normally females that takes a tour, or it's the female that makes the decision in that process. So if they see more light fixtures, they're going to feel more safe and more at home. And over the time, I just started to realize that those are small value adds that doesn't cost a lot of money, or just organic ways to create the value, right? Like let's say you have a property that has 30% hookup connections. Instead of putting washer and dryers in all of those units, you can just charge $35 for the hookups. So that's where I found my little value add leverage piece. And as soon as I graduated high school, I started my property management journey as a porter, just picking up the trash, cleaning the pools, to understand the landscaping. And then I moved up to make ready to understand the turnkey process. Then I moved up to leasing to understand how can I increase the pipelines, what rule of thumbs or marketing strategies I can use to get the most residents coming in the door. And then I moved up to assistant manager to understand the delinquency property. The thing about property manager is I had an interview to be a property manager, and then I was at corporate for that week because we didn't take over that asset, and they understood everything that I knew and the templates that I made, and I became a regional property manager at the age of 19.
Man, that is awesome. So you mentioned something, a few things that kind of stuck out to me is that you invested so much time to kind of learn this business, see how to get into it. So how important was that?
Before I say that, I just want everybody to understand if you don't have a deal that you don't have to know everything. That was the overthinking that I was going through. Is I felt like I had to know all the right information. I had to know the questions to ask or the answers to give. But you don't need to learn everything. Once when you become an owner, there's just more things that you're going to need to learn. But yeah, I was very determined in the learning process because I knew I didn't have any family members or friends that was doing real estate, and I didn't come from money or knew anybody that had money. So I knew the only leverage piece that I had was just my mind. So I try to study every single thing, and I try to understand every position.
So, I got a question for you. What inspired you to get into the real estate industry in high school?
Honestly, I had the inspiration whenever I was in elementary. I just knew it was pretty cool to own properties. I didn't realize how much money you can make from it because I was always thinking about residential. But when I can say whenever I got committed to learning the game and I jumped across Grant Cardone talking about skill, I instantly fell in love. Just by raising the rents of $10, just having the economies of scale, the management systems that you can have in place, uh, the type of managers that you can hire. The more money that your property makes, the better the manager is going to be. It's that simple. So whenever I understood just the benefits from scale, that's what honestly made me fall in love with multifamily.
And I'll call out that one thing that you just mentioned, right? Because when people think about multifamily, they think about a 100 unit, 200 unit, 300 unit. They think it's harder, right? And they think they have to take this on a loan. So you started off, learning, knowing that this is what you were going to contribute, right? And you went into property management. So can you talk a little bit about why property management, a little bit about what you learned there, and then how that kind of came together to close on your first property?
And
Because I knew property management is the answer, right? Like in order for anybody's performing to work, you have to know how to operate a deal. In order to have to know what makes sense on a deal, you have to be on site every single day. That's why I love being like for instance, last Friday, I had a fire at my property. The unit itself didn't get as much damage, but since the sprinklers went off, now the cost is up to 25,000 because it affected our amenities. It affected the elevators. The elevator quote just came back today for 40,000. So whenever you're able to see these numbers and just understand that experience, it helps you in the long run to become an owner. So I always knew the benefits of being in property management. Like I said, I didn't come from money and I never had the experience. So I knew if I knew how to operate a deal in skill, then I can add value to my partners. One of my partners, Gabriel Kraft, he's on this call right now, and I'm sure that he can vouch that me helping with my operational experience can create a lot of value for our deal.
Awesome, awesome. Well, Gabriel, thank you for joining us tonight. Um, Another question for you. So, we're touching on property management. Can you kind of share a little bit of what you've seen kind of go wrong, or what things kind of go on in these properties that you manage, or even some of the horror stories that you've heard?
Of
Because
course.
I'm sure that everyone on this call has heard about, a lot of these horror stories, in Houston and other locations, a lot of fires. Can you kind of touch on that and dig in a little bit?
I can honestly give you a million stories. Like I know I went a
Give
little in
us the good
detail on
ones.
Instagram. Like just okay. I'll give a small story and I'll say it goes back to pride because I always talk about pride. One day when I had to hand out a notice to vacate, one thing that I believe in is hand out a notice to vacate even if they owe a penny. Because to us, we're thinking about the cap rate. So even though it's a penny, it's really it's thousands of dollars that could be lost depending on how many units you have. But yeah, I handed out a notice to vacate for somebody that owed a small balance. They came out with a gun, and I had to tell them, like, hey, I understand this is how you feel. I understand the frustration, but this is my job. I have to legally give this paper to you because then I won't be able to go through the eviction process if I never issued out that notice to vacate. And then whenever they understand that it's just a penny to them, but to us, it's thousands of dollars, right? So whenever they understand that um, how the owner thinks, it definitely helps out a lot. But the reason why I said pride is whenever you show pride to your property, whenever your maintenance has pride for the property, whenever your residents have pride for the property, your whole performance goes way easier. Um, so you're always going to have stories where the residents wants to punch you, the residents want to point a gun at you, your maintenance are being lazy, your porter don't show up to work. But it goes down to the pride. How are you taking care of the property? What type of residents are you allowing in the property? The easiest way to resolve some of your work orders is by having qualified residents. Whenever you have qualified residents that's actually having pride in the property, actually paying their rent, the maintenance job is way easier. At the end of the day, the maintenance, they're going to get paid a certain amount of salary. They're always going to work twice than what they're getting paid for because they're on call 24/7. So, yeah, I've dealt with a lot of situations where somebody threatens my life. I've had threats where they was going to blow up the whole building because we didn't want to pay for their mattress because they brought bed bugs into their unit. But it just goes down to the pride. Who are you allowing in the property? What type of maintenance are you having? And then your manager. It all starts with the manager. Whoever's is in the office, they have to be good with customer service. I call property management free therapy. You're always gonna have people coming inside the office crying to you, screaming at you, cussing at you. They just want to be heard. That's one thing that I realized. Whenever you try to do a lot of rebuttal in this business, it's never going to end well. They're not going to pay their rent. They're just not going to cooperate. But whenever you're able to have somebody that's willing to listen to the residents, it will help out a lot with all of the bad stories that you hear about in property management.
Man, pride. That is I'll attest to that. On the last asset that we just acquired, we had an investor impact day, meaning that we brought our investors, all the GPs were there. We came out, started cleaning. So these are owners, right? GPs. We're all cleaning, we're all picking up trash, we're all talking to all the residents. We're just, we're planting nice little flowers outside. And when people see that, they see the pride and that you actually care and are actually taking care of the property, it signals something to all the residents. It's not that we're just coming in here and we're going to jack up the rents and get everybody out so we can go to market rent, right? We're trying to build this
100%.
community, and I'll tell you, we had a couple residents that lived there over 10 years that that had told us that they were actually going to leave after they seen us, spoke to us. They decided to stay, renew the lease. But pride is something that I think can go a long way. So I definitely agree with you there. I want to go back to when you mentioned that someone pulled out a gun at you. Did that not scare you? Did you not say, "Hey, real estate is done for me"? What went through
It
your mind?
didn't, and it goes back to our first Instagram live. Why are you in property management? I've never looked at this job as a 9 to 5. I always looked at it as how can I increase the bottom line? How can I get as close to the projected performer that we have? Like it's that simple. As whenever you have that mindset that this is a business, you make business decisions. You have no emotions. Just because you pull out a gun, just because you come in the office cussing me out, doesn't mean that I'm going to be emotionally attached to the situation. As soon as they open the door, I said, "Hey, I understand this is how you feel." And I always say this: this is a reminder for your balance. You never go to these units and saying, "Hey, this is a notice to vacate. You have this amount of days, or you're going to get kicked out." They're never going to pay. It's always going to be a back and forth situation. Whenever you go, like, "Hey, I don't know if you forgot. This is just a reminder to pay your rent." I never ask what day that they're able to pay. I do that follow-up conversation whenever I get back in the office. I give them a call, and then I have that conversation. But you never want to be too intense. But yeah, but I've dealt with a lot of situations. But as long as you never bring your emotions involved, then it's always going to be a win-win situation. Whenever they're able to understand both perspectives, and that's one thing that I loved about property management. You always want to understand both sides of a coin. Imagine being an owner and knowing how to operate a deal. Whenever you have these conversations with your residents, whenever you have these conversations with your investors, it's an easy flow conversation.
That's
That's
awesome. That's
awesome.
awesome.
So I wanna let the our guests know how many units are you managing right now?
So right now, Valencia Central, it is 195 units. But in terms of property management, I've managed 3,000 plus.
Wow.
What was your max?
At one time, the max was when I was originally at Rolling Realty, so that was about 600 units.
Wow. At what age was this?
That was when I was 19.
Wow.
So how I know, and then a lot of people don't know, right, that you are a father, right? So how old is your son? What's his name again?
So he is a junior, Kylan Junior. He just turned 1 January 19th.
So how
And
are
he
you
also just took he just took his first 2 steps today. So he's been
Oh,
teasing me a
wow.
little bit. So hopefully he'll start walking soon.
Congrats on that. I have a 11-month baby. She's walking all over the place now. So soon they're gonna be all over, brother. So how are you managing being a father, right? And property management ain't easy, right? It's it's a 24-hour job, right?
Yeah.
How are you balancing that?
I hear people ask me that a lot, and the thing that I have to say about that is, like, I just never thought about, oh, I have to divide my time. I have to divide my time. Like, I just do the job. Like, it's just normal. I'm just used to waking up, being there for my son, going to work, and doing real estate. I've never thought about it as, oh, I have to do this or I have to do this. So honestly, it's never been a challenge to me. But I can definitely say it's definitely been motivation. And I felt like I was meant to have a kid before I had to do. I was already mature, but this just gives me another reason, right? Like whenever we closed Avanti, it didn't really hit me um about the actual deal until I looked at my son. It's like, okay, he's going to be a part of something that's generational wealth. That's all what we talk about is generational wealth, generational wealth. But now that you can see it in effects, it definitely motivated me more than just stressing out.
so
This is David. I got a question real quick.
yeah, jump on in.
Right.
Hey, how did you acquire your first property? Was it seller financing? Was it an LLC buyout, assumable? Can you kind of go over, how you found the property and what steps you took to, be able to secure financing and everything like that?
Hey,
Kylan,
Gabe, since you're on the call, do
Kylan,
you want to take this answer?
yeah, sure. Kylan built a relationship with the sponsor, kind of demonstrated value through almost year and a half, year and 3/4 that we had met when you were underwriting and touring a deal a half hour after me. And then we met, and then we'd seen each other at a lot of events and meetups. But yeah, to answer your question about the deal that we acquired, we used bridge debt on a very unstable 80% sort of occupied physically, less than that economically deal. And we were able to sort of raise 10 million for a 19.43 million purchase price with a $3.5 million construction budget. So it was on market, off market, then on market, then off market. We got interested the second time it flew back off market and started building a team, which included Kylan and a few others. And then ultimately just took about 6 months to get to the closing table after sort of getting under contract, retrading, kind of bouncing all over the place. But yeah, at the end of the day, it was a long, arduous path. As you can imagine, if you know anything about the space right now, it's hard to get these things to the finish line. And Kylan was a big part of the reason we were able to. I mean, we didn't end up taking down any JV equity or private equity or anything like that. But for some of those conversations, and I'd have Kylan work on some special projects, and the level of detail that you're able to get from somebody that knows the business inside and out is light and day difference from those people that just like jump on webinars or join programs but never really take this thing seriously and kind of go all in. So you can kind of see it with Kylan, right? Like I was like, hey, Kylan, we need to know a little bit more. I'm gonna have this conversation with some private equity next week. Like, can you dig in a little bit? Boom, I've got a crime report that goes back 3 years, and he's already called the city to determine that we have 2 different trash companies, and here's the trash savings that we could have. So why don't you adjust your underwriting before going into this call, and then you'll have some good news to tell these potential investors, that hey, we're actually going to save a bunch on contract services because they've been overpaying for their trash. It's just a lot of those detail pieces of people that don't have any experience of the nuts and bolts and like the doing the hard work is sort of what we got out of somebody like Kylan, which is why I think the message right now could be to people like this should be a contact sport. Make sure you love it. Make sure, like how Kylan said it, right? he gets up in the morning, and it's not like this is an agonizing thing where he has to go across town and do all this stuff. He freaking loves it. He loves his kids. He's spending time with his kids, but he's also making investments for down the road for them. And it's not the time for people that are just like, oh yeah, I heard you can make a lot of money. Let me go after it that way. You actually got to put in the work.
Absolutely. No, I agree 100%.
Thank you so much for the question, David. Willie, looks like you have a question, and then I have a question
Yes,
after.
Kylan. So how did you meet your partners on this deal?
So me and Gabe, we met 3 times in 1 week. Like he said, that was when I was a regional for Wellington Realty. I was at one of my properties in Arlington, and my manager was on lunch. He was trying to take a tour, but I know that he was shopping. And then I had went to a tour with a broker, and I met him there as well. And then we met each other at Araque's event that same weekend. So I'm like, hey, let's just stay in contact. And that's what I want people to understand. As long as you're staying engaged with the investors that you know and over giving resources, you could potentially partner up with these people on deals. At the end of the day, as long as they can see the commitment, they can see the drive, and then understand that, hey, you're resourceful, then they would be willing to put you on a deal. I'm definitely grateful, and I'm definitely blessed to be partnered with Gabriel. We have many more deals to come, but it's just those small steps that you have to take prior.
You took the question right out of my mouth, Willie. We have a lot of people on this call that, range in experience, right? They're looking to get into their first deal, or they have multiple deals under their belt, or maybe this is actually a first call around multifamily and they've just been in residential real estate their entire life. Can you share the top thing that you've seen that you had to really kind of work on, or a skill that you had to focus on to kind of start building these connections and get in the right rooms with people?
The questions that you ask, right? Like whenever I first got into the room, like I said, you don't need to learn everything in this business. You're going to still learn over the time. I felt like I needed to know everything. So every time I used to go in the room, it wasn't more of me being cocky or arrogant, but I just wanted them to know, like, hey, I actually been studying this business. But then I realized whenever you do have a lot of information in your head and you ask the right questions, then they will be more engaged with you. Because it's not about what he knows, it's about the questions that he asks based on, it's just the detail in the question. Whenever they understand that your questions are in detail, then they know that you know something. So that's one thing that I would say. As long as you're asking the right questions instead of trying to just say, oh, the cap rate, the DSCR, like we all know that. So as long as you're asking the right questions, that's how you can stay engaged and intrigue that person that you're talking to.
Perfect answer. And I have another question that came in right now.
And another thing.
Yes.
I mean, we're all working on things. Gabe, he's still teaching me how to underwrite and raise capital. But whenever we first had our conversations, I was telling him, like, bro, I want to get on deals, but every time I try to get on a deal, general partners normally want me to capital raise. He was like, Kylan, you don't need to worry about that. If your leverage, if your advantage is in asset management, then that's what you're going to do on a deal, and that's what I'm doing right now. So, focus on whatever role you feel like you're best at, and try to master that before you try to work on everything else.
Awesome, man. So
Let me push back on that. I think you got to put an asterisk. I think you got to put an asterisk by that, right? Because look, Kylan happened to have this unique position he had been in, where he was supposed to be an assistant manager. The person, like, they didn't have the right fit, so they put him in this unique position where he learned asset management, whether he knows it or not, because he was like a regional, but not even all the headaches of a regional. So he was really just learning a lot about a lot. It's exactly what you want in that asset management role. I say that's pretty unique. It's pretty rare, and it happened over a long period of time. Outside of having a special skill set, the other box, like special skills, I think learning how to raise capital or learning how to find deals are the two best ways to get into deals. And the fastest one is learning how to raise capital. So although he was worried and tentative about it, I don't think it's great advice to give everyone of like, yeah, you don't need to worry about that. You can just go underwrite deals for a living. No, I don't think there's that much value for an established person. Underwriting deals ain't that great, because a lot of times I got to go look back at your work and make sure I'm basically teaching you. You're basically asking me to mentor you, but you're telling me you're actually providing me value. So when you do find something, I got to give you money, right? And I'm paraphrasing, right? But the concept is, I think capital raising is a skill set everybody should be chasing right now, because it's one of the most valuable things and it's the easiest entry in. But if you have a special skill set or you're super driven, then yeah, maybe learn some of those other specialty areas. And then finding deals takes much longer and is very hard to do. You also got the problem, like I just mentioned a moment ago, where you're trying to bring a deal to these experienced sponsors, and 90% of the time we hear that, 95% of the time we hear that, it's not even worth opening up the email. You know what I mean? But we do it anyways because we said we would, and then we start analyzing it and we burn through 30 minutes so I can get on a call with you for 30 minutes to say, here's why you were doing everything wrong. You shouldn't even be looking at that deal. And then, there goes an hour, right? And that's how you're trying to make money. I don't think that's always like the best route or easiest route, but those are the two ways that I would recommend for people outside of having a special skill set like Kylan.
Yeah, especially right now in this market, it's definitely tough with a lot that has been going on with a lot of foreclosures, people handing back the keys. You have these big institutions just saying, "Hey, we're just gonna walk away." So I think it's definitely scaring a lot of investors. People are very cautious right now. So I think for anyone on this call that is looking to kind of get into Gabriel's point, the quickest way to kind of get in there is raising capital, and people whenever you're building that relationship, they're going to invest because of you, right? The deals is going to be there if there's attractive returns, but these people you create that relationship with, they're going to trust you, and they're going to invest with you because they believe in you, your vision, and obviously your team to kind of tackle this property or this opportunity that you're presenting. So I 100% there agree. And any questions? Oh, sorry, Tiago, I almost went over your question here. So Kylan covered this at the beginning, but I think you hearing his start into multifamily, I'm sure you're gonna have more questions here. But can you start? Can you kind of remind people how you got into multifamily?
Of course. So I started my journey whenever I was 17 years old, just by studying Grant Cardone and driving every single complex in Ulysses. Oh, another thing that I forgot to put out. Whenever I was driving these deals, I was 17. You can't take a tour till you're 18 years old. So for the deals that was under construction, I used to walk the breezeways. It's kind of illegal, but I used to just try to open up every single door. And then whenever I was able to get in a unit, I would take pictures, and I used to underwrite deals on my journal. That was before I realized that there's a rubbish formula that you're supposed to underwrite on an actual Excel sheet. But yeah, I was trying to underwrite deals on my journal, and when I graduated high school, I started as a porter, picking up trash and cleaning the pools, and then I moved all the way up to regional property manager by the time I turned 19. So that's within a year in the business. And another thing that I want people to understand is, like, you have to stay uncomfortable. That's one thing that I'm really strong on, is you're not growing as a person if you're not in uncomfortable situations. Whenever I was a regional at 19, that was my first time being put in that situation. But I took the steps prior. I had my own templates that I was able to translate for my property managers. And then whenever they used to ask me questions, and I had the answers for them, and they're like, "Hey, I've never knew this, and I've been in the business since 2008." That's when I realized, like, okay, I'm actually knowing something. And then what happened? I felt comfortable again. So as long as you're staying uncomfortable, you're continuously growing. And whenever you look back after having big goals and taking small steps, you're like, "Dang, that happened so fast." When I was 17, I put on my board, it was going to take me 4 years to become a property manager and 4 years to get my first deal. I was able to become a regional within a year in the business, and become a general partner within a year and a half.
So you're talking about goals, right? So I want you to let people know what are your short-term personal goals, your long-term personal goals, and your short-term business and your
I'll tell you everything that I have word for word on my bathroom mirror right now. So on my bathroom mirror, the first thing says, I want to aim for 500 units a year, 5,000 units within 10 years for the average rent of $1,000 will be $1 billion assets under management. Another goal that I have is to do full-time real estate by the end of this year, to become a better man, a better dad. And then another goal that I have is to get to 200 pounds. I'm really, really big on getting big. I love working
How much
out,
you
so
weigh
that's
right
another
now?
goal of mine.
How much
Right
you weigh right
now,
now?
it's not gaining right now. I'm at 170. I look good for 170, but I definitely do have a goal for 200 pounds. So hopefully I'll be able to achieve that.
And how are you positioning yourself to reach your 500 units a year, right? Because you say you want a billion in rent by.
Staying engaged in the market. Looking at deals, talking to general partners. I mean, everybody's always trying to sell a deal, talking to brokers. That's what I'm trying to do more now is create better relationships with brokers and underwrite more deals. Like I said, Gabe, he is teaching me the ins and outs on the underwriting piece, but just staying engaged with people that has deal flow.
And I know we invest in Dallas too. So why I know you invest in Dallas too. Why do you like Dallas?
Well, before I started to really understand like the market analysis, like everybody knows that the DFW is in the top 5 right now. I just always loved it because, well, I mainly loved the HEB area. Whenever I started my journey at 17, I was driving most of the apartment complexes in Euless. There's a lot of apartment complexes in the HEB area. And then whenever you look at the homes, they've been appreciated since 2002. So I never really understood. I'm not going to sit and say that I really understood the in depth of the market analysis piece, but just from property management, seeing the numbers on a daily basis, like I know what areas normally have high delinquency. I know what areas normally have a good physical and economic percentage. I know what areas normally has a mixed race group. So from the property management side, I was just able to see like, hey, any area, honestly, in the DFW, it makes sense. As long as the numbers make sense, it's not that hard to have good numbers. But yeah, I definitely am thankful that the market that I started studying in my backyard is turned out to be one of the top 5 places to invest in real estate.
All right, now I got a quick question here for Gabriel. So I got a question coming in here, and we're gonna rope you into this interview here. So the
Yeah, let's
question
go.
I got was, how did you get started in multifamily?
Ooh. I met Sam Zell. Sam Zell was like, "This is awesome." I didn't say it like that. He's a crazy person. He said it different. But before he died, he was the biggest guy at certain times when it comes to commercial real estate. And I got to meet him and interview him about something different that he was doing at the time, which was buying businesses. Anyway, he just had this fire. And then I studied under some professors at the University of Michigan that had this in their background and kind of showed me the value add game. Came out, did single family stuff. Single family stuff led to having enough capital to kind of consider commercial. And commercial, I effed up. I tried to do it all by myself for a little while and kind of went back to the drawing board and was like, I need to get a mentor. So I got a little mentor locally, got with this great group. I've seen a lot of the familiar faces in the circle from that mentorship group, and so sort of kind of started doing deals as like the newest person on a bigger team, kind of like how Kylan is right now. That was me in 2021. And then we just started having some success with investors and with deal flow, and we're able to put deals into play that weren't going through the drama of 2022 and 2023. So we've been in a good position to where we got the right kind of debt on our deals for the most part, and I've been able to get out there and still be net buyers. But yeah, I mean, it just got started, just kind of flowed our way up from like working a W-2 job and doing single family to finally be in a position to just fully leave that job last year and do multifamily. I'd have to say though, that you have to basically kind of gear up, really carve out like the parts of your life that aren't geared toward that mission, right? You're working 2 jobs a lot of times, right? A lot of us are grinding in the day and then trying to get that cash flow, that passive investment by night or early in the morning or weekends. And that was me for several years. And I tried all the real estate stuff, but kind of got to that place where Now I got a good set of people that I work with. We can raise capital, we can get deals done. And now it's just about rinse, wash, repeat, and find great people because it's a team sport. And you guys talk about that all the time. I mean, that's why I love your crew. Like I know Willie, Enrique, I don't know you guys as well, but Jonathan, Sergio, those are my guys. And I love those folks. I love the crews around town that have been showing that, we can make this a diverse field. We don't have to be straight out of the box, like looking like every broker in town. We could do it a little different, and we actually like try and we grind and we show up and work our butts off. So I think I love the team that we're kind of building. And I think I did see one question in there about capital raising. I'm going to bring it back to capital raising because I think it's super important right now. If you really want to get started, I think it's the fastest route. It's not that crazy to realize that there's a lot of people that have a problem that you have a solution to. I mean, a lot of people's problem is they want to invest their money. They just really don't know how to do that other than what they've been taught, which is sort of the stock market. And after taxes get included, a lot of times these people are not getting great returns. So the solution is these amazing opportunities, multifamily, a generational opportunity right now. But I think one of the best ways you can do it and not have to sell is to link up with some people that have experience, like the gentleman that put this call together, like some of the other names that I threw out there, like our group, and then use their track record, use our track record, use other people's track record to then get in front of those investors and go, hey, look, you're getting your 5% after taxes, and that's okay. That's cool. And you should have some of your portfolio in that. But, if you really want to speed things up, then here's how it's looked for, my business partners and I. And then you kind of show them the chart of the returns that we've experienced in this space. And, if you craft that correctly, you'll be putting them in the right position. You'll be doing the right thing because you'll be getting them into an opportunity that it's very generational right now. It's a special opportunity. I know people said that in 2022 and in 2023, and those were quite the opposite. Turned out probably pretty bad times in 2021, 2022 to jump into deals. We didn't know it at the time, but I'm doubling down, and this is the hill I will die on. That right now is a very special time due to the supply not being able to meet demand in 2026, 2027. And we're working through some short-term supply issues on the other end because there's too much coming online, but there's going to be generational wealth made if you can get into this space now. And I think Kylan just gave some really good examples of how to do that.
Awesome.
So Gabriel.
Yes, David.
Gabriel, for your first equity raise, kind of walk me through, where did you go to raise the capital? Did you?
I'll answer the question. I went into my closet and I cried at night because it's so freaking hard, right? Because everybody thinks they can raise capital until they really get out there. And it's such an awkward thing. And it's such a confidence game. It's very interesting. Yes. It's true that the better you know the space, the more confident you are, the more capital you will raise. Now, nothing raises capital better than an amazing track record. And I've learned now that you can leech onto that better and you can use other people's track record. But I went to my database. I went to my circle of influence. And I'll tell you this, do not be surprised because I've seen it consistently. I've double checked with my buddies. I've double checked with the ladies in this industry, the gentlemen in this industry that are kicking butt. If you go to your first circle of influence, the one right around you, like brother, dad, mom, they're going to come up with some reason, but they are not going to invest with you on your first deal. Especially even if they know the industry, even if you were like, oh, I'll go to my neighbor Craig. He's putting $1 million in angel investing in venture capital. I know he'll put, $75K into my first raise. Those are the people that are going to say no. You still want to treat those people like they invested as soon as you guys close your first deal and send them things if you got a really good newsletter put out there, send it to them because they're watching you, but they're not going to remember you as anything other than what they knew you as, which is not a real estate investor, but it's your second ring. So I'll give you an example. Like my brother and his wife, loaded, have money, could have been cool, could have jumped in. They couldn't be bothered to go down and even investigate this opportunity. They just didn't understand on my first couple of deals, right? But my godmom, who'd been sitting and listening to me talk about real estate investing at Thanksgiving and all the darn time, right, was sitting with $200K under her pillow, essentially. It was not even in invested in anything. It was in a 0% interest savings account, just safety, right? And she's like, I don't know. We'd be to have 3 or 4% would be great on these. And so she ended up being one of my biggest investors on my first couple of deals. She put in 100K and then 100K again, and just was very helpful. And so I say that you have to put in the work, you have to attach yourself to the track record, and You have to put in the work in the right way. You're not selling anything. And when you can get to the point where you realize you're not selling anything, then you're going to be more successful, but it's going to be painful in the beginning because it is essentially sales. The only difference is you're not really selling as much as you are sorting. And when you realize you're a sorting function, you're putting an opportunity in front of a lot of people and you're articulating it well and you're selling it well in that sense of like communicating with great reasons left and right on why their obstacles or their what do they call it? What's the step past obstacle? It's the objections. Why they're misses, right? But at the end of the day, if it's not the right fit, it's not the right fit. If it's not the right time, it's not the right time. And a majority of the people you think are going to be good investors, it's not going to be the right fit or it's not going to be the right time. And it's your job to learn about that fit and that timing over time so that when you do get something that's the right fit or the right timing, then you can just send them right in and they can jump right in your deals. But it's a matter of you putting in the work almost before you have the deal a lot of times, or at least very near to you having your deal, that you're going to be able to have the best hit rate on your investors. That was a lot, but I hope that's helpful. It's painful. Everybody sucks. Do not overcommit, but I'll give you a quick tactical thing if you really want to get out there, is that if you're going to make a commitment to somebody, like I loved Kylan because he was very unsure if he could raise capital. And so I said, okay, cool. Like I actually didn't need him to raise capital on this one. He still tried. It was great. It was really good for him to get that first, hey, I told y'all about this deal and y'all didn't get in. So, in a year or two, we can go back to those people and be like, y'all didn't get in. You should have. Here's what the results are. But if you have to raise capital, right, then you want to make sure you know what you can dial in. Sorry about that. My other partner was calling. You want to make sure you can dial in what a realistic number that you might be able to hit is. And the best way to do that is send out a survey. Send out a survey or have conversations where at the end of that conversation or in the survey, you say, if I had a deal in Dallas, Fort Worth, for example, it's 200 units in 1985 build, and the returns were 5.7% cash on or not cash on average annual cash flow, and maybe we'll call it like a 17% average annual return overall. Would you be interested? And if so, for how much? And that's basically called getting a soft commit. If you have tested your database and you have soft commits, take your soft commit number and divide it by 3. That's just how it is right now. People won't be ready, or people won't really like your specific deal when you get it. But if you can have a soft commit number that you can divide by 3, that's 250, 400K, then you're in the right place. You can raise capital. You're ready to go. You have actual people that you're going to call. And even if 1/3 of those people come through, you're in a good enough spot that you at least hit your minimum number. And then, everybody's going to be happy and understand that you kind of dialed it in and you did the work before you said, oh, I think I can raise capital. No, don't think you can raise capital. Figure out if you can raise capital, because we run out of time very quickly when we get under contract. So it's very helpful to us sponsors when we know what you're good for, at least, with a good faith effort. And I hope that's helpful. I don't see enough people doing it because I say it and then I come back months later and ask those same people, I'm like, did you send it out to your database? And they're like, well, I kind of wasn't. And I'm pretty sure that my neighbor Bill. And I'm like, all right, well, call me back when you sent out the little Google form with the easy questions in it. And you've got an idea of exactly how much you can get in terms of soft commitments.
The small things.
Absolutely.
Appreciate the insights, Gabriel. One thing before I pass it on to Tiago for another question. I saw that Kylan, your pops, is actually on the call. So, man, I think that's awesome. And I just wanted to call that out. I definitely want to hear about your capital raising experience. But we'll take it on to Tiago right now to ask this question first.
Yeah, hey, thanks, Eddie. Thanks, Willie, everyone here. It's very inspiring, Kylan, that, such a young kid, man, with not much background in the industry, it's piercing through. It's like penetrating an industry that it was kind of kept secret through the institutional banks. And individuals like, you and most of us are piercing through and being a successful story, or kind of like a successful case to other people to come in and do it. And especially, again, man, we have to give, the props, like a young age, not much of experience, even though you did so. Really inspiring for all of us. Like David asked questions, I asked questions. And I met Gabriel last couple weeks, and I had a question for you and Gabriel. One of the two can answer, but kind of Gabriel got the experience a little more. All of us, kind of, not all of us, but I would say most of us came from the single family industry, right? Like you start getting your feet wet into property management, maybe buying a property, that's what I did. I started with a single family. I quit my job last year. When you're gauging yourself, let's say, Gabriel, when you're gauging yourself, there is so many sector or different divisions or departments of the multifamily. How did you see yourself being specialized in a single tool? Like, I'm a capital raiser, I'm a managed asset. How do you calibrate yourself? It was by skills, it was by feedback by somebody else, or how did you pick that up?
Do you want to go first, or you want me to go first,
You
Gabriel?
go first, Kylan. You go
Okay.
first because I'm trying to formulate my thoughts around that one.
So, all honesty, whenever I first got into to real estate, I didn't know what I was going to be good at. I honestly didn't know I was going to be this good in property management. But what I did know is that I wanted to understand the operational experience. At the end of the day, if you don't have a track record and you don't have capital, then you have to have some type of experience in this game. So I knew that the main people that's as engaged on a deal is the property management company. So that's what made me get into property management, and I just slowly fell in love with it whenever I started to understand, like, I'm actually learning very, very fast. And what helped me with the property management is I work from 8:30 to 5:30 p.m., but I'm not going to sleep till like 1 in the morning because I'm still studying real estate. So whenever I go back to work that next day, like I said, whenever you're able to understand the property management perspective and then the landlord perspective, it helps you be way better in real estate and property management as an owner, or as, like I said, just in general in real estate. So I didn't know what role I wanted to be in terms of a GP, because I was still learning all of the different roles that comes to being a general partner. But I knew that I wanted to have the operational experience.
Awesome. Appreciate it, Kylan.
I think I'm hopefully this isn't too disappointing of an answer. Yeah, I don't think your single family experience matters. And I think it helps a little bit. And it's nice. I think it's comforting for us really smart people that we're ramping up into it. But 90% of that stuff, you got to throw it out the window. It's what's going to come down to is your other transferable skills, right? That maybe you picked up in single family, but you probably picked them up somewhere else. Look, right now, you can find deals. That's great. You can raise capital. That's great. If you got some special, unique skills like Kylan had, that's great too. But the reality is, it's like, I'll just put it out there, right? You got to know how these deals are sort of set up in terms of who's making what money, right? So, yeah, frankly, like special skills category, you're not going to make as much, right? Kylan ain't trying to get rich off this first deal. He's trying to get experience. He's a smart man. He's looking at it the long game.
I'm sorry. I love that he brought that up. That's the strongest point of this. Whenever I was 17, I knew that real estate was long-term in terms of multifamily. If you want to get rich quick, then the residential is the best answer. But in terms of multifamily, I knew I was going to get rich. I just wanted to have the track record behind my name so that whenever I'm a deal sponsor and becoming the main general partner, then I'll start receiving the fruits and labors. But yeah, 100%.
That's why I mess with Kylan, because he gets it, right? Look, at the end of the day, the front end of the spear is always going to get the most meat. And that's going to be the people that land the deal and take on the most risk at the beginning and start building the team around the deal. To do that well in multifamily, I think you need mentorship. I think you need a coach of some kind. I think you need somebody that's inside of the game, because, at the end of the day, you're putting yourself in a position that you're going to be asking a lot of people to take on a lot of time and risk on these big projects. You got to know what the hell you're doing. And so that's who gets paid the most. And usually the people that probably have the most experience are the best suited for that, especially in a market right now, like today. It's not as free for all as it once was. So unless you're playing in like a secondary or tertiary market that you master and nobody else is paying attention to, your best bet is to work with some people that have more experience, and they're going to get a bigger piece of the pie. Now, capital raising, you have a lot more negotiation capabilities than you used to. It used to be a little easy to do, so you get a little piece of the pie. And I'm not going to share any specifics, but I can one-to-one if you guys ever reach out. Like I can share how it usually is broken down, but it's all negotiable. I think capital raising is starting to fetch a pretty penny. outside of those two skill sets, like all that other stuff that you learn in single family, all that creative stuff, I think you can end up spinning your wheels a lot and not getting a lot done in multi, thinking, oh, I'm going to reach out to sellers and try to find deals. Like there's my friends that are doing that, but they're really good at it. They're like next level good at wholesaling. And then they took that to multi. And now they're also next level good at multi, but they're kind of two separate skill sets. So I would throw the single family stuff sort of to the side and say the best thing about single family is that it can create capital for you to use in multifamily. But like experience is the most valuable thing. I thought I was some consultant, thought I was the smartest guy in the room. And I was such a dweeb the first, 3 deals, because the reality is I didn't even know what questions to ask. I didn't know where to start in the conversation. My friends with experience who will handily say they're not at all the smartest person in the room, they're just the most experienced, were just like starting off with questions that I would have never thought to. And that's why the deals were successful, is that they had experience. So work with the team with some experience and add some value. Now you can do it in specialty ways like Kylan has done, but I think capital raising and helping find deals or take on some of the risk at the front end of the deal are really smart places to start. Whether you're 7 single family buy and holds in or 0, I don't think it's going to play that big of a difference in doing those things. And it might even hurt you because you're going to think you can rewrite the wheel and go, oh, on this flip, I did this one neighborhood that nobody was paying attention to. But like I tried that game of taking my single family skill set in Ohio and applying it to multifamily. And I failed handedly in 2016 when we bought 2 6-unit apartment complexes, and it was nothing like my single family experience. So I would just argue that if you're able to be in like some kind of a group of friends that meets up, or mentorship, like mentorship has become more democratic and equitable. If you ain't got the capital to put in anything, then Kylan just laid out plenty of ways you can build a network of mentors, right? Like me and Kylan would have got down regardless of whether he paid $35K to be part of some mentorship that I was a part of or not, because he made it a habit of his to really add a lot of value, to be consistently showing up, and to prove that, he's a killer. He's a killer. And that's who we all kind of want to work with, right? So I think that's my answer to where do you go from single family to multifamily? Is like, oh, it's nice, but it's not going to play as well as people think, and it might even hurt you. Just go into multifamily and tackle that beast, and know that it's a new beast. So working with people with some experience is probably the best way to do it.
A lot of gems right now. So I'm seeing a lot of fire emojis in the chat. Guys, if you guys are learning at least one thing or find one thing valuable, drop some more fire emojis in the chat. We'll open it up to Gabrielle, who has another question here.
Yes, this is so good. I have a couple of questions to Gabriel. You mentioned about a Google form. So I wasn't sure, like, if you mentioned exactly what the Google form should say, and then and how do you raise capital with confidence when you first get started?
Yeah, the confidence one's easy. Again, if you're playing with the big players in the industry and you're linked up with, and they want you, Gabrielle, Miss Walker, they want you to go out and engage your network. And if you can confidently tell them, hey, I have soft tested my database, I've been educated, and I reach out with them regularly. I got these 7 people, and I know 3 of them are good for $100K. Like I can help out in that way. Would you want me to be in your deal? You'd be surprised at this moment in time what caliber of operator is going to say, here is my resume. Here's like exactly what you need to do to create the webinar and to engage them. And I will handhold you through the whole process, and let's freaking go. So the short answer is, like, with confidence, it comes a few at bats, right? Having conversations is really tough. I think chatting with people with some experience, like in more detail of like, all right, well, how should I navigate this? And confidence also comes with knowing the underwriting part of the business and understanding how the money works, because they're going to ask you questions. Sorry, my wife keeps calling in. 1 second, y'all. And I think the best bet is like to learn the business really well. So like Kylan's a great example. He knows the business really well. He had open questions about underwriting, so he tackled that. And I think that's only going to help his confidence in capital raising, because he doesn't have to go, oh, let me ask Gabe, I have to get back to you. He's going to be like, oh yeah, well, the reason this is that is because of that. And he's going to understand the business well. And that's where having that mentor to really help understand, not mentor singular, but like information's out there on YouTube right now. There's the GOB network who has made it their mission to provide pretty much all of the paid resources for free to people. Like there's a lot of things out there where you can get the information and then you just have to do the work. And that's where can't nobody help you with that. But the original question was sort of, wait, help me remind the first half of the question because I jumped over that to answer the second half.
It was, well, the first one was
what was the first half?
The Google form.
Oh, okay, on the Google form, it's very simple. It's very simple. It's like a paragraph at the top that describes the scenario that's likely to happen soon. If I had a 200 unit deal in Dallas Fort Worth with these returns, would you be interested? And if so, for how much? And then the last part of the question is just simply like, it's like a drop down carrot, a radio button choice. It's like less than 50K, that's a bad example. Let's say 50K, 100K, 200K, 300K plus, right? And then you just have that information on hand. Most people are going to put the little 50K number if that's what you put up there, right? But then you have some people who might say, oh, well, it'd be like 100 if you had that deal. That sounds like a great deal. And so I think right before that paragraph, you probably want it to either be part of an email that links people to this Google form and go straight to the scenario, or you could have it within the email that's like, hey, just so you know, I've been really, I'm becoming extreme. I don't know what the best way to phrase it. You do your own marketing here, but like, this is my thing, right? Multifamily is my thing now. Like I'm really focused on, you need to change their perception of you because they know you as whatever your day job is. You need to change their perception. Like I am a multifamily investor. I've been doing these things, boom, 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 right? I've been going to meetups every night after work. I've been studying until I fall asleep. This is what I'm going to do. And now I've linked up with some operators in, Louisville, Kentucky, right? And in Louisville, we're looking at buying some deals over the next couple months. We're actually really close to being under contract on something. I was interested in knowing if you'd like to enjoy part of this opportunity. And if I had something that looked like this, that, and the other thing, like I mentioned on the this size, this date, vintage, this, return profile, right? With the cash on cash they care about, the total returns they care about. Would you be interested in?
I think he left, but I feel like what he's going to say is, would you be interested in this acquisition? So as long as but the main thing is you have to know your investor goals. As long as you're aligned with what they're trying to look for, what equity multiple they're looking for, that can help you out. So you're not pitching them just any deal that you get, especially if it's going to be your first deal. Like you said, if you're talking to most general partners right now, they'll be willing to let you raise capital on their deals because it's hard to raise capital right now. So as long as whatever the OM of that deal is aligned to your investor needs, then that can help you out a lot.
Man, you guys are providing a lot of value to everyone that we have on the call here.
I love it. I love it.
Pat, I have one more question.
Yes.
When you first started, you raising capital, is that like a verbal agreement that you made? How does it work out?
What do you mean by a verbal agreement?
Is it let's say you part of a group and then you say hey, if you invest 300K, if you inviting but let's say me though from before that you telling me to raise a capital for there's 200 units that you have going. Is that something that you're saying as a verbal contract between us, or am I raising the capital first and then and then we negotiate?
I love that question. I would say two things to that. Whenever I first got my deal, I was running with my head loose, whatever way I could get on a deal. So most of the time, you're not really going to talk about the agreements because you don't really have a structure to go against because you don't have leverage. But I'll give you another example. Like I just got an opportunity to be a part of 118 units. And right now we're talking about in terms of the structure. They want the way how they want me to be a general partner is I have to raise such and such and then bring in a minimum investment. But once we have that track record, which is your leverage of, hey, I'm already doing this for Avanti, then you can renegotiate the terms of how to get put on that deal. Because you are the value. At the end of the day, just because you raise capital on a deal, you still have to participate in some type of role. My role would be the asset management piece. So whenever you're raising capital, what I would have done in the beginning is understand the value that you can bring aside from just capital raising, because you have to have some type of other role in that deal. So whenever it comes to the negotiation piece, that's what I would try to bring up as leverage, is the other roles that you can bring besides capital raising. But yeah, whenever I first was trying to become a general partner, we didn't really talk about the terms because there was not a lot of negotiation. If they're the deal sponsor and they're giving me an opportunity to be on a deal and I just have to capital raise, then it's really whatever they want. But if you know a specialized role that you can bring and add value to that deal, or once when you have that track record behind you, then you can definitely negotiate the terms. But yeah, like I said, I have an opportunity to be on another 118 units in Fort Worth, but we're just negotiating the terms of ownership right now.
And I'll add to that a little bit. It depends on who you're having these discussions in regards to partnership. If you're going to raise capital, some will be more of a verbal, right? Like the recent deal with Gabriel. I'd say first deal, that's the type of mentor that you want to kind of go towards. Someone who's going to kind of push you, get you out of your comfort zone, say, hey, go capital raise. And even if you don't get anything, you're at least, you're getting that traction you're getting that experience under your belt. Definitely in tough market to raise capital in. But there are other groups that they want something more concrete. Everything's already kind of ironed out, right? You'll have those contracts already written up, and that you have to hit that specific number. If not, there might be some potential legal action. I'd say easiest way, just partner with people that you like and you trust. And that's going to be the best way to
And I
kind of get in there and learn.
add to what Eddie said. Like, whenever I first got into this industry, which what we all think is just the deal. Of course, the deal is important because that's what makes the numbers and that's what gives us the capital. But it's about the partners at the end of the day. You're locked in this deal for 5+ years. So you have to be aligned. You have to have similar interests, and you have to have a relationship with the partners that you're partnered with. So I definitely want to add on to that. As long as you're partnered with the right partners, then you can negotiate the terms of everything associated to the deal later. But if you're not, just because you have a deal, you have to realize if we're getting a deal for a 40% discount right now, that's because the previous seller, they didn't have a good performer, or just the team. The previous team that was under that deal, they just couldn't efficiently operate that deal at the maximum potential because they probably wasn't aligned with the same goals, the same interests, or they just didn't develop that great relationship ahead of time. So definitely make sure that you have wise partners. I definitely call Gabe my mentor. He's taught me a lot in this business. I tell him that he motivates me, and he says that I motivate him. I don't know how, but yeah, you just have to be partnered with the right partners in a deal, 100%.
That's awesome, my story. So we about to end it here. So what's one piece of advice that you give everybody starting their journey?
The one advice that I would say is just stay uncomfortable. I love saying it. I'm gonna keep saying it because that's what I'm doing right now. 500 units a year is hard as fuck to get. But the long-term picture of 5,000 units in 10 years at 30 years old and have $1 billion asset, $1 billion of assets under management is definitely beautiful. But you got to stay uncomfortable to achieve those goals. So as long as you're having big goals and taking small steps, you're going to eventually succeed. And that's one thing that I'm strong on. When it comes, like to answer your question earlier, when you said like, how can I just still divide my time of being a dad and still owning units and still going to work? It's because I have big goals and I'm staying uncomfortable. I didn't know what I was going to do when my son was born. I didn't know what I was going to do when I first got this deal. I didn't know what I was going to do when I first became a regional manager. But as long as you're staying consistent and involved in whatever you want to do in life or whatever you want to be in life, and just see those goals. Like I said, on my mirror, every day that I wake up on my bathroom mirror, you're going to see the 5,000 units. You're going to see that says for me to become a better man, a better dad, and to become to be full-time in real estate by the end of this year. So as long as you're still seeing those big goals and staying uncomfortable, you're going to succeed in whatever you're doing. But I definitely would love to stay in contact with each and every one of you that's on this phone call today. I did put my information in the group chat. Kylan Multi Keys is my name on all business platforms. So let's definitely stay in contact and let's partner together. Because at the end of the day, I don't want to just partner with, people on Wall Street. I want to partner with people that have a relationship built with so that we can succeed together.
Kylan.
Yeah, absolutely. I would love to, Eddie, I have your information, but Willie, Kylan, I got yours now. Can I get Gabriel's information too? Because just to let everybody know, I'm a wholesaler for multifamily. I don't have anything in DFW right now, but I have San Antonio and just to give you a little bit of background about me, I did mortgages for single family for 25 years. I did commercial development for another 5 years. Tried getting into retail, buying and flipping and stuff like that, but got into multifamily instead. I now have partners that own acquisition firms. So I'm direct either to the seller or the seller representative on all my deals. Okay. And not only that, I just found out one of my partners, I just found out his best friend is one of the top sports agents in Texas. So I have now access to equity.
Hey, David,
Perfect.
Kylan dropped his info.
I just put Gabriel's contact information in the chat.
Yeah,
Okay.
feel free to reach out to him. I'll connect you, David. So in Facebook, I'll send over the info as well.
Okay.
Kylan, pleasure to have you again. Twice in a matter of a couple of days. Definitely gonna bring you on soon. Definitely staying in contact. And also a special guest, Gabriel, for providing value here that he's not on the call anymore. But appreciate everyone jumping on. Thank you so much.
One more thing,
we are
Eddie.
going to give me one second. Give me 1 second. We're gonna close out this this call. I'm gonna stop the recording and then we're gonna go into breakout rooms. So then that way we can all kind of network a little bit more. So with that being said, I'm gonna stop.